Hello everybody, this will be a quick tutorial on common breakout patterns and kind of formations that price action likes to form and kind of common patterns that tend to happen afterwards as an outcome of that pattern. If you guys learned something new from this video, please give me a thumbs up and subscribe. It really helps me out create more content for this channel and especially help out new beginners learning how to trade. The first set of pattern that we can look at is called a double top. It kind of looks like a McDonald's M, really, and it happens when price kind of makes the same high twice and then it rejects off of that. And this is a common reversal pattern. And we can usually take a short once price breaks below that and just kind of aim on towards the bottom of the neckline. And so this can be looked at as kind of a retest of this, and then we can reject down from that. A good indication to look at is just simply looking at volume. And if you see a large volume in selling, it means it's a typically good breakout and you can trade that. Another one similar to the double top is kind of a head and shoulders pattern where we have price just kind of making a higher high, and then I'll make a higher low, and then I'll make a higher high, and then it will just come back to this previous higher low, and then just kind of make a lower low. And so it'll come back down, just kind of retest this, and it will come back up, and then you can wait for that retest and then short based off of that retest. Again, using volume, you could probably put your stop loss anywhere from up in here, and your main target or main take profit could be down to where this previous price pump and began was. And so this can be a common overall macro trend strategy to trend. A next major reversal pattern can be called the Rise and Wedge, where we have price kind of pumping up, and then it'll make a higher low, a higher high, higher low, higher high, higher low, and then finally it'll make another higher low, or higher high, I mean, and then it will break and test this higher low again. And so you guys can draw a basic trend line. Sorry for my poor drawings, but hope you guys get the point. And so it will retest this higher low, kind of come down and then retest it and then reject off of it. And a common take profit for this can be the bottom of the start of the pump, and you can put your stop loss right about where this previous higher low was. The next pattern to look at is called a double bottom, or kind of a W pattern. And this is a reversal pattern to the upside now. And so we get a price where it makes a common exact low with the bottom. You guys kind of get the point here. And so that can be a solid formation as support. And then it will kind of make a sideways range. And so price will then retest this kind of lower high. And then it will come back down, make the same low as it did previously. And then it'll come up and test this same lower high right here, and then just kind of reject off of that and then kind of break above that. And so what you guys can do is kind of put your stop loss down here, and then you guys can take profits at around the start of the dump. So previously we looked at a head and shoulders. Now we can look at an inverse head and shoulders, and this is more of a bullish sign. And so we have, again, the two sort of shoulders making the same, touching the same resistance as it did earlier. We also have the two kind of start of the shoulders touching the same support as it did earlier. We will also get a break of this common support. And so we'll get a head forming right here. And so what you guys can do is wait for this retest. You'll start to notice it forming once it kind of starts rejecting off of this resistance here. And so you guys can draw a trend line right here, horizontal line or whatever, and then wait for that retest, and then put your stop loss at the head. And then your final take profit can be at the start of the sort of dump right there. And last but not least, we get a falling wedge, just kind of like the rising wedge, except for this is a trend reversal in the up direction, I guess to say. And so we get price just kind of dumping down. It'll make a lower low, and then it'll make a lower low right here. It'll make a higher low, and then just a lower low, higher low, and then finally it'll bounce off of this lower low and just kind of pump up from there. What you guys can do is draw a trend line going down, wait for the fourth time for the trend line to kind of get a breakout of, wait for that retest, and then you guys can put your long entry up to your first take profit right here. Along with your stop loss, you can put below or at that last lower low before the breakout. And so this will be the last of the reversal patterns. This next group of patterns are essentially continuation patterns. Continuation pattern is really just essentially a continuation of the uptrend or downtrend. And so right here is our first example, and this is called a rising wedge. We just kind of have a sort of a smooshed up triangle just kind of forming together. And what you guys can do is basically I'll take a trend line from the highest point in the rising wedge. And so hold on, let me turn off that. And what I can do is once this breaks out, I can bring this to the top of the wedge where it broke out and set this as my final take profit. And so what you guys want to do is again wait on for a retest of this high right here, this what was resistance as it becomes support, and enter on that retest. Put your stop loss again below or at this support of the previous trend line, and then you guys can just set your take profits at the measurement of this the largest portion of the wedge. Next, we'll have a bullish rectangle. This is basically when price shoots up and then it just kind of consolidates sideways. And so you guys can draw a horizontal line of the common resistances of this last high. They tend to respect it quite well. And then once a low of the possible range has been established, you guys can draw again another horizontal line on the supports. And then lastly, once this starts breaking out of the resistance, what you can do is again take a trend line and draw the height of this rectangle, put it on top of the breakout, and then just wait for the retest of that resistance as it becomes support now, and set this length of the trend line as your take profit. Then what you can do is essentially set your stop loss down in this area just in case, or subjectively you can set it for the middle of the range. Next is a bullish pendant, and bullish pendant is basically when price is pumping up and then it just kind of comes down, establishes a low, and then it'll make a lower high followed by a higher low, and then a lower high followed by a higher low. And so it just kind of consolidates and kind of coils up. And so what you guys can do is draw trend lines touching the resistances and the supports. And again, take your trend line and draw it from the highest point, and then set it on the top of the breakout, and this will be your final take profit. Again, wait for a retest of the resistance supported, flipped into support, and then enter in once that does happen. And of course, you can take your stop loss and put it below this support down here of the bottom rising of the wedge. And so this will be another breakout range. This next set of breakout patterns will be a continuation pattern still, but to the downside. And so this will be a rising wedge to the downside. And so you'll have price making higher highs. At the same time, price will be making higher lows. And so what this essentially does is this kind of, again, coils up. And what you want to do is, again, draw a vertical line from the height of the triangle, aim for the downwards breakout, and this will be your take profit. This will actually be a lot longer than that lower low, but my drawings aren't the best. But again, what you want to wait for is a retest of this support, and it'll act as resistance this time, and it will reject off of that. You want to enter here, put your entry there, and then set your stop loss just where that last resistance or last high was. This downside continuation pattern is called a bearish wedge, where again we have price make a low and it will establish that low as a support, and then it will make a high and establish that as a resistance and a sideways range. What you guys can do is draw just the height of that rectangle and point it downward, and this will be your final take profit. Again, wait for price to break out and then retest of this support, and it will act as resistance. Enter based off of that, and then what you can do is set your stop loss for just above the resistance right there, and then finally this will be your take profit down there. Here is a bearish pennant where we have price coming down, making a low, and it will establish and make higher lows. At the same time, it'll make a local high and then establish lower highs based off of that. And so it's all kind of smushing together. And so what you guys can do again is set a height of that descending triangle and set it downwards. And this will be your final take profit. What you guys can do is then set your stop loss right above this second lower high, and then wait for the retest of the previous support, and it will act as resistance. Enter based off of that, and then just take profits at that final level. This next set of patterns will be bilateral patterns, meaning they have the potential of breaking to the upside or downside. Bitcoin is very famous for doing these and forming these type of patterns, especially on the daily time frame and higher time frames overall. And so this is called an ascending triangle, where it shares a common resistance, a flat horizontal line, followed by an increasing higher lows. And so what you guys can do is, again, draw a height of the ascending triangle to the upside, and then again to the downside. Let me copy and paste this. And this will be your final take profit either way. And so if it does break to the downside, again, wait for that retest and then rejection. You'd want to put your stop loss right above that support or resistance in that case. And then again, for if it breaks to the upside, what you want to do is, again, wait for that retest from that resistance acting as support, and then set your stop loss right above that last lower high. Next is a symmetrical triangle, where we have price just kind of consolidating, making lower highs, followed by higher lows. And so again, take the height of this symmetrical triangle, point it to the upside if it does break to the upside, point it down to the downside for your take profits, to the downside if it breaks to the downside. Again, wait for a rejection of the resistance or support, and then set your stop loss above the last high or below the last low, depending if you're trading or shorting or longing. And then just take your final take profits at the height of the symmetrical triangle. Last and not least, we got a descending triangle where we have a common support, a horizontal line essentially, and then we have price making lower lows. And so that can be looked at as kind of a consolidation pattern coming together. And again, you guys can take the height of the descending triangle, set it as a take profit to the upside if it does break to the upside, along with the downside. I see Bitcoin doing this a lot, especially on the daily time frames. And what you guys can do is just wait for any retest of support or resistance. Put your stop loss underneath that previous trend of support or resistance, depending if you're longing or shorting, and then take profits at the height of the symmetrical triangle. And last but not least, a bull and bear flag. And this is probably one of the most common patterns out there, especially in Bitcoin and other trading currencies. So you'll have price making a kind of a pull of the flag, and then the actual flag itself where it's making lower lows, lower low, higher, lower low, and just keep on doing that. And here you can just draw your trend lines like so, touching the support and resistance. Let me redraw that. Oh my gosh, I can't draw it today. So, and then do that. And then here, what's different is you'll just take your pull and then set it for the top of the triangle, and this will be your final take profit. And then you guys can put your stop loss right below that last support line. And so contrary to the bull flag, there is a bear flag where we have our flag pull again. And then we have the flag itself where we have price making higher lows, and then we have price again making higher highs. And so what you guys can do is again, copy that flag pull and then set it towards the bottom of it. And this will be your final take profit. And then you can put your stop loss right above that last support of the high. And so that is your A to Z common trading patterns. The very most important ones, just extra things to add to your trading toolkit. And again, if you guys liked and enjoyed this video, please give me a thumbs up and subscribe if you haven't already. And thanks. Bye.